week, the U.S. Bureau of Labor reported the unemployment rate for the month of April rose to nearly 15%. It is the highest since the Great Depression. I spoke with Spencer McGowan of the McGowan Group Asset Management in Dallas today about the state of the economy and when could things get better. Spencer, thanks for being with us tonight. A new report says that the economy lost around 22 million jobs in April. That is the steepest plunge in payroll since the Great Depression. What effect has that had on the economy?
Well, you're going to be a minus 28% annualized for this quarter. Last quarter was a minus 5% annualized. Then the projections are really important because when you start to bounce back from that, you've got a 10% projection for the third quarter. So if we look at Q3, plus 10%, maybe as much as plus 20%, depending on how the reopening goes. So you start to hire back those people in May. Tale of two waitresses, I think you'll enjoy. My stepdaughter and her best friend are waitresses. They got more money from unemployment and their stimulus checks than they've ever had in their checking. One of them's back to work, and one of them goes back to work in about 10 days. So about a third of those jobs are restored probably just in May, based upon other evidence that we have.
That's interesting. Yeah, I was going to ask, what are you seeing? Is there any indication what the numbers might be like for May?
You know, I believe you're going to be, by the end of the month, potentially a plus 7 million, optimistically maybe as many as 10 million jobs restored. June and July, maybe another 7 to 10 million. And the rest are sticky. You know, they may take a year to a year and a half to replace, you know, which puts you out towards the end of 2021 for a potential record employment. That would be 157 million people employed, which is where we were before the shutdown.
Now, your job is to keep an eye on the stock market. How would you describe the market right now?
Well, obviously troubled, right? For those that own financial assets, not like people, you know, it's a lot like people who owned real estate in 2008, 2009. Real estate went down by half. The Dow went from over 29,000 to just above 18,000, now at about 24,000. That's the midpoint. That's no accident as we look forward to a reopening. You're going to have a trading range for an extended period because it's unlikely the Dow gets back to a record until 2023. So part of that guidance is to say, okay, what do we do in the meantime to gain advantage by the time we get out to 2023, 2025, when we hope this is a distant memory.
Yeah, what are you telling your clients about what they should be doing with their money right now? Should we be buying or selling?
You know, the 401k plans, and this is part of our service. We go into a 401k, we look at allocations, and part of it is when you're contributing right now, you're buying blue chips at a discount for the equity portion. For the bond portion, we like the corporate high yield better because the Fed injecting $2 trillion, the Treasury borrowing $3 trillion to make sure that there are not massive defaults and a massive catastrophe later on. Those two stimuluses probably overcome a big part of the trouble.